How you doing, everyone? It's Bill here. Today I want to go over Airbnb stock with you. This is a stock that I believe in the long term is going to do wonderful things. I think it's going to be gains upon gains. This is changing the hotel industry, and just completely, I guess no better word, just disrupting it. Um, you look at companies, other hotel companies, and they have to own, so many things that cost them extra money. Um, they got to own the buildings and they got to fix the buildings and do all this stuff. Where Airbnb, all they do is basically own the technology. They don't have to worry about all this extra costs that go along with it. In addition to that, something that Airbnb brings to the table is just the fact that uh, what the place you're staying in itself, it's not just, one or two little rooms condensed to itself. You got to walk through this whole building to get to it. And then, I might have a pool or something that you got to share with all these other people. It's houses, it's more like home. And it can be a house that you couldn't ever afford to live in, and you can go stay in it for a while. I know myself, I much prefer to stay in an Airbnb than I do to stay in a hotel. Um, it's especially better since, I have such a big family, with my wife and 5 children. If I go get a hotel room, I probably have to get 2 rooms, which for what I'm getting is not nearly as good as being able to go into Airbnb and getting a house and just get one house, and all of us be able to stay together like that. I recently uh, flew my parents down to LA, and we went and stayed in Airbnb there, and it was the same or less than a hotel, and we were all able to stay together. It was 7 of us in it, and the kids shared a room, but my wife and I had our own room. My parents had their own room, and then it was like 2 kids to a room, so it was perfect. And another way it saves you money is, you'll have a kitchen and appliances and things, refrigerators and stuff that you can use. Most hotels don't have that, and if they do, it's not nearly as good. So you can save money because you don't have to go out and eat all the time. You can cook your own meals and do things like that. So that's just some other little ways that it saves you money. Another source of revenue for that Airbnb does that, most hotels don't, is you can book experiences with them also. So you can see what there is to do around the area and book it with them right there in the app and go, about everything. It's like having basically your own concierge right there online. So that's just one more thing that you don't have to do. When we look at Airbnb, I believe the first thing we have to look at is, do we believe the pandemic is on its way out, is going to keep getting worse, or pretty much be status quo? Basically, how is the United States and really the rest of the world going to deal with it? Because that's what's going to play a major part in how Airbnb does. If people can't travel, if people don't want to travel, if people are scared to travel, then Airbnb is going to have a rough time. But as we can see, now that travel has opened up, Airbnb has started to recover and is recovering quite well. They were absolutely devastated when the pandemic first started, but uh, as we read here, its business has recovered nicely in 2021, and it's evidenced by its strong second quarter earnings report. Uh, During that period, nights and experiences booked hit 83.1 million, up 197% year over year, and down only 1% from the same quarter of 2019. So it's basically on par with before the pandemic, with the pandemic still going on. So we can see that it's going to keep, you know, it's just got so many tailwinds to keep pushing it forward. Revenue looked even stronger, up 299% year over year to 1.33 billion. So, and that's up 10% on a 2-year basis, so over 2019. The free cash flow was 784 million in the period, which is impressive at first glance. However, Airbnb sees a seasonally high influx of booked rooms in the first half of the year, which results in a short-term surge of cash from customers. Free cash flow margin will even out over a full year to a lower level. Another huge positive is they have 7.3 billion in cash and only 1.98 billion in long-term debt. So financially, Airbnb is set up quite well. They've also adjusted, with the start of the pandemic. So that's a sign of a good company. They've streamlined its operations and it's focusing on a few key initiatives like attracting as many hosts as possible, improving the guest journey, and enhancing customer service. This means that most of Airbnb's growth, at least for the next few years, should come from an increase in nights and experiences booked on the platform. We see that with travel restrictions still in place in many areas around the globe, Airbnb should get a nice tailwind as the threat of the pandemic eases in the coming months. There are also some trends that Airbnb has talked about that indicate travelers are leaning more toward Airbnb style rentals due to the pandemic. Growth in nights booked in non-urban areas was much stronger than in urban regions in the second quarter. So, unlike most hotels, which have to cater to areas with more travelers, Airbnb can evolve with the tastes and trends of its customers, even if they want to travel to more remote locations. This is one of the key advantages of its decentralized platform. So Airbnb can literally be anywhere. That's the beauty of it. You don't have to go just to tourist areas or things like that. You can literally go anywhere with Airbnb and you can see whatever you want to see, do whatever you want to do. Another thing that's helped Airbnb is that are going places for longer stays would much prefer to stay in Airbnb. You see that it says stays of 28 days or more remained our fastest growing category by trip length. Who wants to stay in a hotel for a month? You want to live in a home for a month. And that's something Airbnb definitely has over the hotel industry. We also see that in Q1, Airbnb reported 64.4 million nights and experiences booked, a 13% increase from the same period last year. Significantly, gross booking value, which is the company's way of tracking the dollar value of its bookings, which include host earnings, service and cleaning fees, and taxes, rose to 10.3 billion, a 52% year-over-year increase. That implies that the average booking price has increased substantially, an important metric for a company that derives revenue as a percent of booking value. Revenue increased to 887 million, a 5% increase year over year. And while the company continued to post a net loss, so it's not a profitable company yet, adjusted earnings before interest, taxes, depreciation, and amortization, EBITDA, improved from 333.3 million loss in the same period prior to 58.6 million loss in Q1. So it's a substantial improvement. And that's in the midst of when the pandemic was starting. I'm sorry, that was actually before the pandemic started. So even during the pandemic, it's beating numbers from before the pandemic. Once again, we see here 24% of bookings were for stays of 28 nights or longer, compared with 14% in 2019. That's a huge advantage, I believe, over hotels. We look here at what I was mentioning before, is Airbnb does not own or operate any real estate. It avoids many of the capital and operating expenditures of a regular hotel. Land, construction, renovations, property tax, a doorman, or a maid. I mean, that is just massive to not have to worry about paying for that. We also see here it says total nights and experiences booked in the second quarter were up almost 200% from 2020 to 83.1 million, higher than the 79.2 million analysts had expected. The quote from Brian Chesky, Last Saturday night, more than 4 million guests from around the world were staying in Airbnb, which is more people than the entire population of Los Angeles. That's how big Airbnb has grown to, and it's still growing. So, getting into their revenues here, we can look and see that their revenues were growing extremely fast until the pandemic hit, and that pretty much put it to a screeching halt. But that was to be expected. And as you can see, the trailing 12 months, they're starting to pick up, and they've almost caught where they were from December of 2019. I believe that by the time we hit December this year, it'll be right there with it. As we look at their balance sheet here, we can see that their cash on hand is almost $7.5 billion, which has just been growing every year. That's just an enormous amount of money. Their current assets are over 14 billion, and their total assets are almost 15.5 billion. So while they do have some liabilities, 12 billion, it's not nearly quite as much as what their assets are. And like I said, that cash on hand is just huge. We look at the earnings per share, the EPS estimates for December 2021, and they are expected to lose $1.38 per share. But in December 2022, it looks like they're expected to turn a profit. They're going to should have a EPS of about 51 cents and a forward PE of 332. We can also see that their revenue estimates it's expected to grow very fast. And while they do have a bit of an expensive forward price to sales, I believe it's understandable because of the way that they're growing. And basically, I don't feel like they really have any competitors to speak of. Some people want to compare them to hotels and how their price to sales are so much cheaper, but I just don't really believe that they're the same product. Yeah, they kind of compete against each other for customers, but just the product itself to me is totally different. So I don't think it's a fair comparison. It's just completely different styles, and hotels just aren't growing the way that Airbnb is growing. Looking at their expected growth, they have a forward growth of 14.5% expected this year. And they say compared to the sector median of 7.84%. So that is better than that, but that's hotels. And I just don't really think that there really is a sector median for Airbnb. I kind of think they're their own they're their own sector, so to speak. We can also see that their free cash flow was up 470% year over year. If you do want to compare them to their quote unquote peers, I guess maybe the closest would be Booking Holdings, but you see their market cap is bigger than all of them. You look at employees; they don't have near the employees of the other companies, so that's just that's that much less they have to spend. So after looking at all that, my stance on Airbnb is I still believe that at its current price, I'm looking to buy. I'm not necessarily looking to load the boat, but I believe in dollar cost averaging, and so buying some here or there. I started buying originally when it was about $200, and I bought it all the way down as it was going down, and I bought some, you know, down in the 130s, and then I bought it as it's kind of gone back up. I currently own 41 shares of it, and my average cost is I'm pretty much break even. I'm within a few percentage up or down. I don't really remember off the top of my head, but I believe long term that this is just something that's gonna just make me tons of money. Currently it's my third largest holding. It's about 6.5% or something like that of my portfolio. So, and I have no problem adding to that. I wouldn't mind it if it got up to 10% or more. I feel that confident in it. So that's my thoughts. Let me know if you agree or disagree. Tell me what you think. please give me a like, give me a subscribe, and if there's any other you want me to look at, let me know. Other than that, have a great day.